Alright everybody, so I want to talk about today not only just resting liquidity and understand what it actually means when we actually start seeing buyers reload on the bid and sellers reload on the offer, but also give you guys a breakdown on how I was able to make $21,000 today basically on SPY puts, which I ended up using ES order flow data to actually execute these trades. And of course, if you guys want to trade live with me and take these setups with me in real time, you guys can click that very first link in the description. We trade Monday through Friday every single day, the New York session, and mainly we trade ES futures. You can also execute SPX CFDs and such as me today, SPY options. So today was really like a put day. We were looking for shorts all the way up here at the 160s, never got confirmation, so we didn't execute here. We looked for shorts at 155, again, it never got entry confirmation, so we didn't execute here. And then I ended up taking some shorts at these 61.46 range, ended up taking profit here at the 61.40s, ended up taking longs actually up here in this 61.44 range as well, which didn't end up playing out. So I took a loss there and then ended up taking these shorts that really put me heavy in the green, because after taking these two trades, I did end up having a small green day, but I ended up taking one more trade that really put me in the green today. And I want to give you guys an understanding as to why I took that trade, because when we're looking at price action, when we see price action is like this, like price action is bouncing off of this area of support, most people wouldn't have actually looked to take any type of long position here or any type of short position here, because we're bouncing off of support and support is still actually holding. But when we actually get and we dive deeper and we understand liquidity and how the market actually works and how the market works like an auction, then we're actually able to see these types of setups before they actually play out. And you guys can see price dumped all the way down to the 61.30s, which on the volume profile, which I'll pull it up here, the 61.30s is going to be a major area from yesterday's price action, which if we look at the 61.30s all the way down here, not only did it break through this high volume node, but we came down into this low volume node. So what I was telling basically the live room is like, if we break under these 61.40s, we're going to go much deeper down into the 61.30s and the potentially like the 61.23s, which we never got down to the 61.23s, but I was able to capitalize off the move off the 61.30s. And what really helped me here a lot was the book map. Not only using the book map side by side, but really is looking at the book map, looking at absorption, and looking at the DOM here as well. So here you guys can see we actually have a quick DOM where we could see bids placed inside the market. So I'm going to break this down for you guys and what all of this means here for you guys really quickly here. So basically what you guys are seeing is anything. So we have, first of all, the bid, and then we have the ask here as well. We have the bid in green, we have the ask in red. So this is going to be where current price is sitting on this box right here. So anything that you see resting above the bid, all of these orange highlights, this is all going to be resting in passive liquidity inside of the markets, simply meaning that these are going to be limit orders inside of the markets. These are typically going to be sell limit orders in the market here. And anything that you see under price action that you see, again, that's an orange, maybe even like these lighter blues, this is all going to be buy limits inside of the markets. So we could really see and get an understanding as to where we see sellers trying to come in the markets, which you can see the 61.50, we have some resting liquidity, 61.48s, we have some nice offers here, and at the 61.47s, we have some nice offers. And really the only area that we have some good buy limits is here at the 61.45s. Now, what we also have here are these volume bubbles, which these volume bubbles are going to be aggressive buying coming into the market, basically anybody using a market execution order, and aggressive selling coming into the market, anybody using a market execution order entering short positions here as well. And then what we see here is basically an absorption indicator that let us know like, hey, you know what? We had 156 contracts aggressively executed at a market order that was absorbed, and those contracts were absorbed by passive liquidity. And in this situation here with this purple one, it's going to be absorbed by the offers or the orders resting on the offer here. So I'm going to go ahead and press play here, and you guys can actually see this live. So one thing that I was looking at that basically stopped the confirmation for price action to continue to go up was look at all of this resting liquidity, look at all of this absorption, meaning that we had passive buyers absorbing aggressive sellers orders, and what we saw was price action continuing to go down and struggling to bounce back up. Typically, one thing with absorption is what I want to see is after that absorption actually holds, I want to see the market immediately pop back up. So I would have liked to seeing this aggressive selling absorption essentially get followed through with aggressive buying. But notice after the absorption, aggressive buying came into the markets, price popped back down. Again, more aggressive selling came into the markets, there was more absorption here, and then aggressive selling came into the markets and price continued to go down. Like, that's a big red flag if you're looking for the market to pop up in this situation here, which if we also look at this here as well, what you could see is, again, we have more absorption inside of this market. So we have more buying absorption, meaning that, or more selling absorption, meaning that we have passive limit orders absorbing aggressive market participants' orders. And we see that the buyers can't hold the market up at this point. That would be a big red flag for me if I was looking to take longs here. And you can see 132 contracts here got absorbed inside of this market here. So at this point, with all of this absorption that we're seeing inside of the markets, I'm actually going to pause this because I don't want to like run through this. But we can even see after this absorption, I'm going to even zoom this out. After the sellers got absorbed for 132 contracts, you can see aggressive buying start coming into the markets. More aggressive buying came into the markets, and again, there was absorption here with the offer now as well. So now the buyers are actually getting absorbed on this pop up, and they failed to continue to push price higher. And you can see that price came back down, aggressive selling got absorbed, and we had bids reloading here at 145. So the buyers are really trying to hold the market up in this situation here at 145. And you can even see their attempt at holding the market up here at 145. Imagine we just saw absorption at these 145 and a halves, and then we see buyers immediately reload back into the market. So what I want you guys to pay attention to here on the DOM is look at the average. Look at the average contract. 60 to 70 is typically the average. Now, the outliers in this situation here are going to be 166 contracts at 145, 114 contracts at 142, and then we have 109 contracts at 144. So these are going to be the outliers in this situation. You can see how much volume is being developed at this specific price range. So we have a lot of volume being developed in this price range, and we're seeing the buyers actually struggle to hold and maintain price above these 145s in this situation. You can see how much absorption or how much sell side absorption there actually was, and we see sellers coming right back down and attempting to break and push price lower. So again, what causes these breakouts in the markets are going to be the imbalances from this aggressive selling and from the aggressive buying, and the passive liquidity is what's going to hold the market at a certain area. You guys could see that that large buyer that was sitting there was actually 136 contracts, and then you could see these buyers reloaded for 122 contracts that just got loaded up here on the bid, and we're still seeing price struggle to push up. This is a huge red flag if you're a buyer, because you're seeing that aggressive selling eat through that absorption. So for me, this would be an area where it's like, yeah, no, these longs are definitely not going to be playing out. At some point, we could be looking to revert this position and potentially take this thing short, especially with all of this selling absorption that we see here. It's just not holding. We're seeing price continuously make new efforts to go lower, and you guys can see how aggressive the sellers are actually getting because they're actually getting rewarded. And that's the thing too. It's like if you see a lot of aggressive selling inside of the markets and you see passive buying holding the market up and the selling isn't getting rewarded, that's one story. But even on this dip up, look at how immediately aggressive buying got absorbed here. Now, notice throughout the rest of price action today, you don't really see much absorption. You don't really see anything along those lines. But because we're trading at the POC, which is going to be at 146, we see a lot of action going on here. We could see a lot of aggressive buying that really isn't getting rewarded. Look at all of the bubbles that you see. Look at all of these green bubbles. These are all aggressive buyers trying to lift the market up, which they're not getting rewarded for their efforts here. And you can even see on this pop back up, again, aggressive buyers failed to push price above 145, and we had some sell side absorption here as well. And then notice that now this line wasn't there before. I'm going to rewind this a little bit. Notice that we have, after that absorption, which I'm going to fast forward this a little bit, notice that we have no red line here. We have maybe like 80 contracts sitting. We see the absorption there, still no red line. And then shortly after, watch this. So you see now how this red line just popped up. Again, what this shows us is that we have sellers reloading on the offer and that they're willing to continue to get into this market and drive this market down. Notice we're not really seeing that type of action from the buyers. We're not really seeing buyers reload here on the bid. that is a huge red flag for you if you were to be looking to be a buyer in this market right now. What this tells me is that we're seeing sellers willing to continue to sell this market and are willing to continue to hold the market down. So once that aggressive buying dries up and that buying gets exhausted, we're going to see aggressive selling coming into the markets, and that's what's going to drive price down. So I'm going to keep letting this kind of play out here. And this is kind of what I'm watching here on not only my footprint charts, but on the heat map as well. And I'm explaining this to everybody live, is that all of this absorption that we see from the buyers, we're not really seeing that get rewarded. We're really seeing a lot of aggressive selling eat through a lot of this absorption. You can see how many buyers are getting filled inside of this market, how many passive buyers are getting filled inside of this market. 176, 125, 120. You would think that if the buyers are really trying to hold this market up, then we wouldn't see price continue to drop lower and lower. We wouldn't see the aggressive selling actually get rewarded. Still no real confirmation for me to take the shorts just yet because of our multiple purposes, but I'll break everything down here in a second. So I'm going to fast forward this a little bit more. So we can see that we're starting to see some reward for all of this aggressive selling here. Now, this is what's super important here. As price is dipping lower below these 142 and a halves, you guys can see how much passive selling. I'm going to show you here. So notice, look at these 142 and a halves. Well, actually, let's let price get a little bit lower. No, let's look at these 142 and a halves. 56 contracts, 73 contracts, 52 contracts, and then obviously we have the current price that's getting filled. So what we can see here so far is that this is just kind of normal resting liquidity that we see throughout the entire price range in the order book. Same thing all the way down here. But once we start to actually see that sellers are getting rewarded, look at how, and then half of these orders are actually going to be one single large participant. Look at how the sellers are willing to drive this market down by reloading on the offer here. And notice where this white line actually is. So basically this white line is a little bit over half of the range here. Anything before this white line is going to signify that it is one single order, and the rest could be made up of multiple orders or another one single order. It just depends on the contract. So 126 divided by 2, that's going to be one single order. But look at how the sellers are reloading on the offer here, and we don't see that type of action from the buyers. If we were to look at the bids here, we don't really have any bids until we get down into like these 138s. So these sellers are willing to continue to drive the market lower, and they're willing to continue to push price lower. And the way you want to think about this is think about resistance as kind of like almost like a dynamic resistance in this situation here for the sellers here. Anybody using a sell limit. The sellers are willing to bring resistance lower and lower and lower to continue to drive this market lower. So for me, what I wanted to see in this situation, you can see how aggressively these sellers are reloading. What I wanted to see in this situation was for price to push up into these 142, 142 and a quarter, 142 and a halves, fill some of this liquidity. And if I can see that absorption hold, I'm going to take the shorts targeting the 130s to the 123s, which we can see now. Again, aggressive selling is coming into the markets. We had a little bit of offer. We had a little bit of bids reload here, but nothing crazy like this that we see over here. We see like almost 450 contracts in here, just in the 142s alone. The sellers, again, it shows us the intention, more importantly, that the sellers are willing to continue to drive this market down. And it would be the same thing if we saw the bids actually reload here. So why using order flow data and the book map is so important, also DOM as well, is once you see price pushing into a key level of resistance, it'll show you what you should be waiting for and if that resistance range is going to hold or not. And when you see signs like this, where we see a lot of absorption and we see a lot of passive liquidity continuing to reload on the offer, and I'm going to be looking for shorts, that is a great sign for my position. So in this situation, again, we're seeing this aggressive selling get rewarded. We see some bids reload here at 139, but again, it doesn't compare to how many orders are sitting here on the offer. What I'm going to be waiting for is a pop up into this area of resting liquidity. And if we could see absorption in this range, I'm going to take the entry there with my stop loss just slightly above where this resting liquidity is, maybe like a point or so, with which I ended up putting my stop at like 143.5. And I'll break everything down right here in a second. We could see aggressive selling coming to the markets. And notice how some of these orders got removed off of the bid. Like that's a huge red flag there as well. So we can see prices now starting to pop back up into this area of resting liquidity. And again, what I want to establish is the absorption. And notice that as price is getting closer and closer, we're seeing more and more sellers reload here on the offer. That is a great sign for continuation on these shorts. So we can see that we had now some buyers get absorbed here for 115 contracts. Once I saw that, all I simply waited for was for aggressive sellers to follow up before executing. So right here, we see some aggressive selling getting into the markets. So this is where I actually bought my puts here at 6141.25 with my stop loss up here at 6143.25, and I ended up targeting the 130s. So if I were to just put that up onto a risk to reward tool for you guys, and I use very low risk on this trade too, because I had already taken one winning trade and one losing trade. I didn't want to turn a green day into a break even or a red day, and I've taken very low risk. So I entered here at the 6141.25s. My stop loss, whoops, let me move this back. My stop loss is going to be 6120. Let me check the order book here really quick. So my stop loss is going to be 6143.25, which is going to be literally right here. And then I ended up taking profit at the 6130.5, which is going to be a 5R multiple on this trade alone, which I think I got a little bit more than that, but it's, you know, options contracts. It's different, especially with 0 DTE. So it's not like quite the same, but I'm going to open back up Bookmap and I'm going to play this out for the rest of you guys. So we can see aggressive selling follow up after that. You could have entered anytime here. You could have even waited for a retest to get a little bit of a better entry, which you got a little bit of a pullback here. But you can see immediately how after that absorption, more contracts are now reloading on the offer here. And then you can see as we're pushing lower, we see again absorption from now the buyers where the sellers are getting absorbed, but we ate and pushed right through that. Notice the difference between this absorption up here where the offers were loaded and then the absorption down here where we just ate right through this absorption and continued to go through. If I saw this absorption get eaten through and we saw price continue to push up, there would be no entry. But that's also why I waited for the aggressive selling, because if you wouldn't have waited for aggressive buying in this situation, you would have been just straight cooked and you would have taken the trade, and there's not enough confirmation here. But because we had not only the offers reloading, showing me the intentions of the sellers that they're willing to drive this market down, we also had the absorption and we had aggressive selling follow up and start to get rewarded here as well. 3 beautiful entry confirmations on this trade, and you guys can see price ended up dumping all the way to 6131, which we couldn't get quite down to the 6130s, but at this point at like 6132, I'm already securing profits and I already closed out of my entire position, and that was a really quick and easy breakout trade. And I just wanted to give you guys a breakdown on that and how you guys could also read the book map as well. Again, I know this looks a little bit intimidating at first. You know, you're seeing a lot basically throughout the entire order book, but again, practice makes perfect, back testing. And the thing about Bookmap too is like all of these sessions are recorded. This is a recorded session here that you could have it auto record so you can go back and back test. And that's what's really going to separate you from the 90% of people who are losing money consistently in the markets to the people who are making money consistently over a long period of time. So other than that, guys, again, if you guys want to trade with me every single day, Monday through Friday, make sure you guys click that very first link in the description. And I hope you guys are able to gain some form of value from this video. And I really hope you guys get started into order flow trading. It doesn't matter if you trade SPY options, ES contracts, or even SPX, CFDs. Getting into order flow will really elevate your trading and give you a lot better of an edge than the majority of people who aren't using this order flow data to their advantage.